How's it going, everybody? It's Stas here, and in today's video, we're going to be doing an overall market update, taking a look at the Dow Jones, the S&P 500, and the NASDAQ. We're also going to be doing a trading update, talking about what I personally did today in the markets, as well as some stocks and ETFs that I'm watching and looking to trade right now in the month of January in 2020. And as you guys read in the title, we're also going to be talking about NIO Stock as it sold off roughly 10% today. And I want to give you guys some thoughts about NIO and kind of what I'm doing with my position in NIO Stock right now. But before we do get into that, all I ask from you is if you enjoy this video, find value in this video, simply go down below for me and hit that like button, and also consider subscribing to the channel if you want to see further content from me. And if you actually want 2 free stocks from Webull valued up to $1,400, I have an affiliate link down below where if you deposit $100 using that link, you get 2 free stocks valued up to $1,400, which is insane. So go take advantage of that deal linked down below in the description box. So without further ado, guys, let's get right into it, starting off here with the SPX, the S&P 500, as we always do in these videos. So today, guys, we ended up closing down $9.10, down 0.28%. And do you remember that level that I was talking about in yesterday's video? Let me show you on this smaller time frame chart. This level at around 32.45. Well, we tested it multiple times today, actually roughly twice, 2 times today, and we failed breaking out of it. And you guys can see 32.45, 32.47. This general area was a resistance back on the 31st, or actually no, on the 2nd of January. It was also a resistance on the 3rd of January, on the 6th of January, and again today we got rejected there roughly 2 times. Once here in the morning, and I guess you can say this was another failed attempt of breaking out of that level roughly at power hour today as well. So the markets right now, I think they're kind of struggling to break out here, to break to another fresh all-time high due to the tensions with Iran and the United States. I think that's what's in the short term here holding back this market, and you guys can see it even more if we pull back to the 20-day 1-hour chart. We were uptrending very nicely, higher highs, higher lows, all of that good stuff. Then we got the news around Iran and the United States a couple days ago. I believe that was on Thursday heading into Friday, and ever since then, guys, we've kind of tapered off in this market. And if we look at the ES, the E-mini S&P 500 index futures, this is actually tanking here after hours. It's actually down 0.5% right now, and if you see, the S&P ended up going down, like we said, 0.3% at the close of the market, so the futures are down another additional 0.2 to 0.25% as of right now, which is not too good. And what that's telling me is if that holds heading into tomorrow morning session, guys, on the S&P 500 at least, we may be selling down even further, maybe testing down to maybe 32.15, putting us right on top of that 50 SMA here on the 4-hour chart, which, hey, that could end up being a pretty decent dip buy opportunity for people that trade market ETFs out there. And one ETF in particular that I watch that tracks the S&P is this one right here, ticker symbol SPXL. You guys can see it's an S&P 500 Bull ETF. It's actually a 3x leveraged ETF, meaning it moves 3 times as quick as the S&P moves to the upside. It pretty much tracks the S&P, but let's say the S&P goes up 1% one day, SPXL will go roughly up 3% because, again, it's a 3x leveraged ETF. So this is definitely one to watch if the S&P were to take a sell-off. Going over here to the Dow Jones, we can see Currently down 120 points right now at the close of the market, down 0.42%. And if we zoom in a bit here to that 5-day, 5-minute chart, we can see, give me a second here, we can see the strong resistance. Actually, let's go to this 10-day chart. We may see it better. There we go. The strong resistance at about $28,700. We can see we failed there on the 27th of December, on the 2nd of December before popping to that all-time high. We kind of struggled there a bit on the 3rd of December, or rather the 3rd of January, and actually on the 6th of January as well. And today, we've just been struggling at this overall level. And what is that telling me? Well, that's telling me that we're seeing some tensions right now in these markets, which makes sense because of the U.S. and Iran situation going on, right? And where could we end up bouncing on this Dow Jones? Well, if we go back to the 4-hour chart, we can see maybe we're going down to, I'd say at the low end here, 28,350, putting us right above that previous all-time high. Well, should I say one of the previous all-time highs, and on top of that 50 SMA on this 4-hour chart, which probably gives us another 0.5% downside here for the Dow Jones. And if we look at those futures, they're also down a bit here after market hours, down I'd say about, what is it, like 0.1%, more like 0.15%. So markets are selling off even further here. If we go over to the NASDAQ, we can see this is down about 11 points here, but let me double check with Yahoo Finance to see exactly where the NASDAQ ended up closing. The NASDAQ actually closed down $2 today, which is really nothing, down 0.03%. So the fact that we're down 0.14% right now is telling me that the NASDAQ has sold off an additional 0.1% since the close of the market today, which was about 45 minutes prior to me recording this video right now. So if we go in on the NASDAQ on the 5-day, 5-minute, we can see clear resistance at around $8,900. We failed breaking out of there today. Now with this dump off here, we're breaking below 88.50, which is a worrisome sign on a technical basis here, due to that being a previous resistance that we kind of need to hold here as a new support. At least the bulls need to hold that level. And the fact that we're breaking it, hey, we may be going down to this 180 SMA on this hourly chart, which could put the NASDAQ at around an $8,800 level here in terms of these NASDAQ futures. So overall, guys, that's kind of the breakdown here. Markets sold off a bit today. It seems like these tensions are still kind of having kind of a ceiling on these markets right now. They're preventing these markets from spiking to highs, and I'd love to know what you guys have to think about that down below in the comment section. And the markets are continuing to sell off into the aftermarket session here, which I'm interested really in seeing, is this going to hold into tomorrow's session? And that's kind of what I'm waiting for any dip buys in individual stocks, or again any of these market ETFs that track the overall indexes. So that's it for the market update. Let me know in the comments any thoughts that you guys have. Now, let's quickly talk about stocks that I'm involved with, and then we'll get into some stocks that I'm looking to buy here and looking to enter as swing trades over the course of January in 2020. So a couple that I'm involved with here, guys, that did well today. We'll run through them very quickly because I know I do this every video. I don't want to get too repetitive here with the content, but for any new viewers out there, the ones that I'm currently in are Facebook, ticker symbol FB, which did very well today. It ended up gapping up to about $214.58 here this morning, hitting, I believe, a 52-week high yet again. And it ended up closing the day up 46 cents, up 0.22%, because of the sell-off that we saw, over the course of the day, ever since we hit that 52-week high, which was more towards the morning today. And my whole goal with Facebook, guys, is to hold it up to 220 at least. And honestly, if we get to 217, 18, I might consider just locking in profits because their earnings are coming up here on the 29th of January, which is about 3 weeks from now, and I typically don't like holding through earnings when it comes to my swing position. So, hey, I might lock in profits, but I'll let you guys know in the next couple of weeks if you stay to these videos and watch these videos. So make sure to subscribe to the channel if you haven't done so already. So I'm in Facebook from about 205 to 208. That's kind of where I built the position, and up to 220. That's going to give me around a 5 to 7% profit potential, depending on where I end up taking those profits, right? So another one that I'm in is PayPal, PYPL. This one did well this morning. I was thinking of taking profits with the way the action was pre-market, but honestly, guys, I didn't get the chance because we can see here we were hitting 112, which is one of my sell targets, but ultimately we sold off so quick that I didn't even get the chance to lock in my profits, honestly. It kind of sucked, to be honest, guys, because at 112, I was up a pretty good chunk on my position, as you guys know, since I've been buying PayPal in the 105, 106, 107 range, and the fact that it dumped all the way to 110 in the matter of 5-10 minutes, I lost about 1.5% of that gain, and honestly, that led me to just simply holding on to my shares, and I'm glad I did because we can see it's flatlining out here at about 110, and it seems like it's holding that level as a support at a higher low here on the 50 SMA, as you guys can see on this hourly. So ideally, this is the move I want to see, a break up back to 112, and that's where I'm looking on at shaving a lot of my profits here on PayPal. So a couple other ones, ATV, this one did very, very well today, up 60 cents, up 1%. I plan on holding this one like I've been mentioning in these videos. I feel like this is the one that I bought, or rather that I've been holding the longest here. I want to hold this up to about $62 at least. If you guys have been following the videos, you know that I've been locking in profits in the 60 level. I believe that was a week, 10 days ago, when I did lock those profits, and I kept some shares on the table due to what's happening now, the next break up, right? I always keep some shares. Well, not always, but a lot of the time, I keep some shares in stocks just to have exposure, right? Just to have exposure if I believe I'm bullish in them, even though I'm locking in profits to be conservative at the same time as I'm being aggressive. This is kind of how I mitigate risk. I'm locking in profits, but at the same time, I believe a stock is bullish, so I do have some exposure in it, which is the way I play a bunch of my swings here, and ATV is no different, right? So other ones, not to drag this part of the video out too long, but other ones I'm in are Home Depot. This one is kind of break even still. It's not really doing anything, but I'm still holding onto it due to the potential it still has, in my opinion, based on this trend here. And honestly, if we end up popping up and breaking out of this little downtrend that we're seeing, we're kind of in a wedge here, which is why I'm still holding it, because there's still potential for the breakup. If we break out of here above the 180 SMA, I'll probably lock in a profit on Home Depot anywhere from 225 up to 230. But on the flip side, let's say we dump and break the bottom of this wedge, the support, I'll probably end up taking a loss there, or maybe even breaking even. Actually, no, I won't break even. Probably end up taking a loss of around anywhere from 0.5 to 1% there, which is okay because other swings that I'm in, they're doing quite well. And did I mention Uber? Oh my God, am I completely forgetting this? Uber is the one that did the best today. I don't think I mentioned it a couple minutes ago, but Uber, ticker symbol UBER, ended up going up 4% today, up $1.23, and we finally got a big push today. A lot of buyers coming in Uber, a lot of volume today in Uber, and this is really panning out exactly as my plan, which is fantastic, guys. A lot of these stocks are, to be honest. Facebook has been doing everything according to plan. Activision, PayPal has been a bit iffy. but still, it's been doing well, and yeah, it's nice seeing my plan as a trader. As an investor, it's nice seeing when your plan actually goes through, right? It works out, and it's nice, right? So this is Uber, and I'm sure a lot of you guys can relate to that, and let me know down below if you can. So Uber here. UBER, this is one that I've been buying at around 30.50 up to about 30.80. And you guys know that if you've been following these videos, right? I talk about this stuff every single day, right, before the move actually happens. So, we've been buying this one, I've been buying this one, and now on my position, I'm up around what? Like up here, upwards of around 6%, which is incredible, right? And my goal sell at this point right now is around 33.50, and with how Uber's been moving, this could very well hit tomorrow. Who knows, guys? And after that point, right, I should get around an 8% gain at around 33.50. Like PayPal, like Activision, I might leave some shares on the table. Because overall, I'm still bullish on Uber, and I do want the exposure to the shares, to the stock, but at the same time, I want to play it conservative as well by locking in some gains. So those are some stocks, guys. Uber, crushed it on Uber today. Facebook, PayPal, what are some other ones? Oh my God, I almost forgot to mention, I entered McDonald's today. It almost left my mind, guys. I entered McDonald's today, very small position, just getting some exposure in it in my swing account at about, I believe, $200. I think it was $250. Let me show you on the daily, because we pulled down this morning. Actually, no, it wasn't at $250. It was more, I think it was more up here because it was after this little bottom breakup here. As you guys can see, this is where I started, or rather the technical breakup that I saw that led me to start a position. I think it was at around, if I remember correctly, like 285, 280, something like that. And this is one that I really plan on holding up to about $205 per share, which, as we've talked about, in these previous videos, that move, it's not crazy, but at the end of the day, it's a 2% move, and there's even more potential above that, up to about 212, that offers around a 5 to 6%. So for me, looking at a risk-reward potential, a ratio rather, I think the reward outweighs the risk here, especially since McDonald's, if you guys see on this 3-year chart, it's continuing the uptrend with this breakup here into the 200s officially, as we've held this higher low on this trend here, which is fantastic. So those are some stocks that I'm in, what I'm personally doing right now. And yeah, I'd love to know what you guys have to think down below. Now let's quickly talk about NIO Stock and some other stocks that I have my eyes on that I want to buy here, that I'm looking to buy in the month of January 2020, and looking to swing trade for a couple of weeks to a couple of months in the beginning of this year. So NIO, ticker symbol NIO, was down 12% today, down 44 cents. And it seems like there is obviously more profit taking here on NIO. That's kind of obvious. We're seeing a lot of selling pressure ever since that day we ran from 250 all the way up to 480, which was crazy. But at the end of the day, guys, this move, if you recall, was roughly 90%. And even though we've sold off all the way to 324, the stock is still up 31%, guys. It's up 31% from this 240 low that we were literally at a week ago, guys. Under a week ago, actually a little bit over a week ago, we were this at 247, and a week later, it's up 30%. So I feel like NIO here is shaking some weak hands out. It's obviously, again, profit taking, and the trend, if we look at it on this 20-day 1-hour chart, at the end of the day, although it's looking funky here, we kind of have a double top at around 450. Obviously we sold off. At the end of the day, we're still holding the uptrend here above that 180 SMA. And one thing that I think here in the short term, sure, we may see another gap down. And I believe if we break this level, the 180 SMA at around 320, the gap down level that we may go down to, if we go back to that 4-hour chart, could be around $3 per share. I think that is very, very possible, guys, that NIO, if it breaks this level 320, it goes down to $3 per share, as that has been a level of support, as you guys can clearly see here, over these past couple of months. So NIO stock, at the end of the day, it got overheated. It went up 90%, which that move doesn't really justify, at the end of the day, the type of earnings that we got. Sure, the earnings were great. If I remember correctly, they lost a lot less money than they were supposed to, obviously, and comparing last year, they lost a lot less money than they did last year. So the company is moving in a decent direction, but at the end of the day, those earnings did not justify a 90% move. So we're slowly shaking the weak hands off here. So in the short term, $3 could be the area, but either way, you know, 3 to 320, that's the range that could end up being a buy range here if you really want and believe in NIO and want to hold it here for a couple of months. This could be an opportunity, in my opinion, but don't buy because of my opinion. This is strictly my opinion. You have to formulate your own opinion and base your decisions off of that and understand the risk involved with a stock like NIO. You can lose your money with NIO. Let's be honest here. You can lose all of your money, which is why, me personally, I'm not dedicating more than I'm willing to lose completely in this position, and I only have $1,000 in NIO right now in my long-term private account, right? And that's the truth of it, guys. That's an amount of money that I'm willing to lose. And that's pretty much it. If we break $3 at that point, we may be going to 280, and I'll update you guys on a video if that happens with my updated thoughts. So let me know down below in the comments, what are your thoughts on NIO? Now let's break down some other stocks. Disney, ticker symbol DIS. This is one that I almost pulled the trigger on, guys, today, but I did not want to get faked out. And we can see here, I was about to enter here. We were breaking above that downtrend. You guys can see on this hourly, right? Actually, probably better on the 90-day chart. You guys can see this downtrend here. We were slowly looking to pop this morning at around 146, but you can see it ended up being a fake out because we got rejected by that resistance at a lower high. Now we're pushing back down to test 145. So we're in this wedge. We're literally squeezing in here. What direction are we going to pick tomorrow? That should be really what's going to tell us to go long or short on Disney. If we break 145, like I mentioned here, this could easily gap down to 141, maybe down to about 143, especially if these markets see some tensions and a further sell-off. I think that's very possible. But let's say, you know, we do get the technical break up above 147, 148. That's where I'd consider buying some Disney and building a swing position, because at the end of the day, to the upside here, we can make a move up to 150, 153, no problem, which does offer a couple percentage points of profit there, on Disney. We already talked about PayPal, guys, ticker symbol PYPL, so no need to go more depth into that. One that I like that's actually in a horizontal pattern here is Starbucks, and Starbucks is interesting. I think it could go two ways here based on this pattern, and there's different ways we can trade it here. So take a look at this. We're trading between $87 right now and around $89.50. What did we do last week, literally 1 week ago on the 30th of December when we were at $87.30? Well, we filled all the way back up to about $89.50, which at the end of the day, that's a nice chunk of a move there in 2 days of around 2.5%. Now, with the tensions in Iran, markets selling off a bit, we've gone from $89.50 all the way back down. Well, not all the way, like it's a huge move, but back down to $87.50, which could end up being a nice dip buy if we end up holding this level in the morning. And I believe if these markets, this is a larger cap stock, so the overall markets I feel like fluctuated more, right? So if the markets do well tomorrow, watch the futures, guys, large caps in the morning, and we start to rally back up here, and especially if the markets look like they're going to stretch to all-time highs in these next couple of days, I think Starbucks should easily fill up to $89. And honestly, this could continue rallying. As you guys can see, there's potential back up to $91, $91.50, maybe even back up, maybe one day back up to that all-time high, but let's not get there until we slowly break back up into the 90s. But on the downside, if we break 87.50, these markets sell off a bit, which, hey, could happen. We've seen this happen before. A target here on Starbucks, I'd say on the downside would be around $86 on top of that 180 SMA, which, hey, that could open up a nice dip buy as well. So another stock that I'm in, actually, no, not that I'm in, guys. What am I saying? Mixing up my words here. Another stock is Chipotle. This one, not much to say about it. Only good thing is that obviously we broke up yesterday above 860, or rather that might have been on Friday, and this was in our 2 breakout stocks video, which came out yesterday. Now, today, we ended up holding this level as a new support, and it seems like we're forming a bullish green candlestick after hours here, heading into the after hour session on the 4-hour chart, which is a good sign that this wants to continue the uptrend. So Chipotle, I think it has potential at 870 and even higher, $900 plus. I believe it can get there, especially if they hit a grand slam with their earnings here on the 4th of February. So AMD is another one that we'll talk about here, and this is another one that's kind of like a momentum to the upside play. It hasn't really gotten crushed like some other stocks we've talked about, like McDonald's, for example, Uber, where the momentum was down. Now it's slowly shifting back up. AMD has had the momentum up for the past couple of months. Honestly, for the past couple of years, they haven't really seen an extended period of time where they sold off a lot, right? We can see McDonald's had 6 months. You know, the most that AMD has sold off here was 3 months, probably this time period right here. And in the past 6 months in particular, guys, it seems like every little pull down we've seen has opened up a buying opportunity for AMD. And the fact that we're seeing some weakness here at about $49.80, $50, we're slowly selling off. I'm looking for a pull down to that 50 SMA, maybe at about $47, and this could end up being a dip buy from $47 up to about $50 per share, guys. That could be around a 5 to 6% potential with how crazy of a momentum play this has been. I could see that happening just like that, especially if these markets stay healthy. If we get a 15% correction, guys, all of these stocks at the end of the day, they're going to fall down. But if these markets continue to truck along here, all-time highs, AMD should have no problem, in my opinion, correcting from 47 back up to 50, and that's a viable move, in my opinion. So to end off this video, let's talk about some gold. /GC, gold was up $7 today, up another 0.5 percentage point. Very, very bullish ever since we broke above 1550. So a couple of ETFs I'm watching here around gold are GLD. I personally own this one in my M1 Finance portfolio. GLD is actually an ETF that tracks gold, and these are all ones to consider here as gold has been pushing up since there are some tensions in the market. We're at the end of the economic cycle, right? A lot of people are worried about the markets. Well, not a lot of people, right? But there are people out there worried about the markets, worried about the dollar, and they want to hedge using gold. And it's a pretty decent idea to do that, in my personal opinion, at least. Have a little bit in gold, or just understand the gold market in general. And GLD is one of those, right? GLD, one that's a bit more risky, it's leveraged, is JNUG, ticker symbol JNUG. This one trades based upon GDX, and they all pretty much just go up when gold goes up. GDX is an ETF, and again, JNUG tracks it, and JNUG goes up 3 times whatever GDX goes up. So those are a couple there that I'm watching. Crude oil ended up taking a dip today from about 64.50 down to about excuse me, guys, $62.40. And it seems like it's holding this 50 SMA right now, which has been a support over the past couple of months. So every dip that goes, or that happens rather, with crude oil, it's worth watching UWT, which goes up whenever crude oil goes up at a 3x rate, also known as a 3x leveraged ETN, right? So now that crude oil is dipping, UWT's dipping, opening up a decent opportunity. And, oil's worth watching here, especially with the tensions between Iran and the United States, as that caused the massive spike here in crude oil from about, actually, no, this is not crude oil, but crude oil and UWT at the end of the day. So those are just a couple of picks, a lot of picks I feel like we went over in this video. Let me know down below in the comments any thoughts that you guys have about these stocks, the markets in general. I'd love to know. And if you guys enjoyed this video, simply go down below for me and hit that like button, and also consider subscribing to the channel if you want to see further content from me. And don't forget, 2 free stocks from Webull if you use my affiliate link down below in the description box and deposit $100. And those 2 free stocks are valued up to $1,400, which is insane, guys. Go take advantage of that deal. Get your free money so you can invest and trade more money. So I'll catch you all in the next video. Thanks again for watching. As always, I appreciate all of your support so much. I'll catch you all. Peace out.